Hello, my name is Marcella Ocañas, and today we're talking about financial budgets. I'm going to go over a few of the most common used budgets in accounting that some of them I use in my daily work. First, you might ask, why do we need a budget? The main reason is to set our financial goals for the year. It could also be to set financial goals for the future. It's also a good way to manage expenses within departments or company overall. You know where the money is being spent if you need to pull back on some of the expenses during the year. It might also have an effect on a loan application. The banker is probably going to ask you about projections for your company and want to know that you know where the company is going. Also, it helps with tax preparation. If you've budgeted for certain expenses throughout the year and you don't see them when you get to tax prep time, then you want to go back and see if you're missing any information. Also, it's a good way to attract investors that you already have all of the budgets laid out for the year. It's easy to present to them, and they know they're making a good investment in your company. There are many different types of budgets. These are probably the top 5 that you'll see in a company: a master budget, operational budget, cash flow budget, financial budget, and a static budget. Today, I'm only going to go over the master budget, the operational budget, and the cash flow budget. Master budget. This is a high-level view of every expense, every department, every segment of the company rolled up into one, usually used by the executive team for tracking projections. It's all encompassing, so every single piece of each department expenses are rolled up into this. And like I said, company projections, they help you or give you a roadmap so you know where you're going for the year and for future years. To prepare a master budget, it is very tedious and it takes several steps to get there. Here's a guideline to show you everything you'll need, and this is mainly for a manufacturing company. As you can see, you start with the sales budget, production budget, manufacturing budget. Then you go into the regular everyday expenses, selling administration, capital expenditures, cash budget, income statement, budgeted balance sheet, budgeted cash flow. So this is how you get to the final step of preparing this all in a spreadsheet. Most of the time, the spreadsheet will have different tabs for each of these budgets, and then one roll-up tab with everything on one. But in my company, we have majority of this all on one spreadsheet that kind of looks like an income statement, and then on separate tabs we have the balance sheet, capital expenditures budget, kind of broken out. So we want to know, for the company as a whole, are we going to make money this year? Are we projecting to make money? And hopefully the answer is yes. And really, it's just something we look at every month to see where we are on an executive level. If you have board of directors, they're probably looking at this every month also to see where you're at. The next budget, operational budget. This is used, I would say, for every company I've worked for. Majority of companies out there, this is what you're dealing with on a monthly basis. They're very departmental. If you have lots of departments, you might have them broken out on different tabs, and then it rolls up into one. They're reviewed monthly. They also are normally, you can print these from your accounting software. So if you don't have to have these in a spreadsheet, that's better. If you have a system that you can put in a budget and then it goes from there, it's very helpful because you're running the budget versus actual every month to review where you stand with your company expenses. And the creation process is less tedious because it is at a department level, mostly managers or department heads are the ones creating this budget and then handing it in to the controller, assistant controller, CFO for review. So this is how to prepare an operational budget for a small business segment. You start with the sales projection, then you go into your production budget and manufacturing budget. So since it's just for a small department, you don't need, or they're not going to go into a cash flow statement or an income statement. So it's pretty basic for them. However, when you go into each of these different budgets, it could get pretty lengthy on manufacturing and production depending on what you are building. So if you're just a department that doesn't have any income, which is common, a marketing department, an accounting department, you just really need your operating expenses, administrative expenses, and your capital budget. And most of the time, the capital budget is a separate budget kept that the controller is tracking every month. And really every month you're going to see the operating expenses and the administrative expenses on the budget versus actual statement. Here is an example of a budget versus actual statement. This is for Craig's landscaping service. And as you can see, there's a column for the actual numbers, those are actual expenses for the year. Then a column for the budgeted numbers, what we thought we were going to do for the month. And then a column that shows the variance between the two actual and budget columns. The last percentage budget on the actual budget I use now, there's not a percent to budget. I don't think you need to have it. You can have it. In some companies it's helpful. But really we want to know, are we on target for the year? And Craig is not. As you can see on the bottom, it shows negative 58 with the projected 2,104. So not on track. Need to, get more income coming in, probably manage expenses better. Next, we're going to talk about the cash flow budget. It's important to remember or to know this is not a cash flow statement. This is something that's tracking the move of cash coming in and going out. And the most important questions it's answering is when is it coming in and when is it going out. For companies that are not as steady throughout the year, like a retail company, most of the money coming in is during this time, the Christmas holiday time, and money going out, well, that's happening throughout the year in preparation for this seasonal time. You can prepare this weekly, roll it up weekly, or you can have it broken out daily. Where I work, I do it daily. And questions that someone might come to you as a controller are, can we buy a new forklift? Can we buy a new vehicle to transport merchandise? There's always something to buy. There's always department heads wanting more. So this cash flow budget is really important to know where you stand with cash on hand. To prepare the cash flow budget, all you really need is your sources of inflow and sources of outflow. And what this means is, how am I getting my money? Am I making deposits every day? Do I have credit card sales? Are people submitting checks for payment? And outflow really means, how is the accounting department paying for things? So it could be a wire, it could be by check, also bank drafts if you already have stuff set up for automatic. This is an example of a cash flow budget. This is daily, so you start with your beginning cash balance for the day, and basically everything that hits the bank for that day is recorded. Cash inflows, cash deposits, credit card deposits. Here I have For outflows, wires broken out into categories so that you know where you're spending your money. If you have large merchandise purchases, we want to know. Payroll is usually a big one that hits every month. Taxes is another big one. And then interest on the loan, it's important to keep that separate so you know how much you're paying on that. The other part of this is checks. There's a lot of unknown, and you want to make sure you know how much is outstanding in checks so that you don't write more checks than the money you have in the bank. You know, it's really important that payroll gets paid every month. Big expenditures like the employee insurance, you want to make sure you have money on hand to make sure those go through. So remember that a budget is only as good as the information you put in. If you've done your due diligence, you know the numbers that you're putting into your budget are evidence-based, then you know you have a good budget. Don't just guess at a number and think that that's how you should do it. You really should have good background information for why you projected that number. Also, a budget is not perfect. It's a budget. It tells you kind of where you're going, but you never know throughout the year what's going to happen. The toilets might explode, then you have to get a plumber out, and it takes 3 days for them to fix it. Well, that's an expense you probably didn't budget for, and it's going to throw you off a little bit, but, you know, you can't always predict everything when it comes to budgeting. Well, thank you. That's all I have. Again, I'm Marcella Ocañas.